What is up, my realtor friends? Hey, I got a ton of stuff for you today. I'm going to try and keep the video under 4 minutes, but we're going to talk about what's happening with interest rates, how tariffs are affecting it, stock market crashes, what's happening with interest rates. So we'll talk about that. We'll also talk about 2 classes I have coming up. I have a class called Establishing Your Value. So this is all about getting clients to sign your buyer agency or listing agency. What do you got to do? So we'll talk about that class. I also got a class all about buy downs. So temporary buy downs, permanent buy downs. We're going to talk about how to negotiate these things with sellers. What are they actually? How do they work? How much do they cost? We're going to give you everything you need to know about negotiating seller paid buy downs for your buyers. We're still seeing those. So we'll tell you a little bit more about that class. Lastly, we have a really cool product for luxury buyers. I'm going to give you, and potentially sellers, I'm going to give you a couple scenarios around that and how your clients can either buy with a rate of around 5.125% or offer potential buyers 5.125%. Okay, let's hop into it. So stock market's crashing, my 401k is crashing, IRAs are crashing, my portfolio balance is crashing, but you know what else is going down? Interest rates. So we're about 1% lower than we were in April of last year, and that is a good thing. Why are they lower? Well, what happens with rates is when the economy is scary, the stock market's crashing, tariffs, higher unemployment, people are talking about recessions, investors get scared and they pull their money out of risky assets like stocks and put it into more secure assets like bonds. So mortgages are a bond, so they're investing in debt. Mortgages, treasury bills, they're considered more secure investments than the stock market. So when it's scary out there, all the investors start buying mortgage bonds, put all their money over there, treasury bills, and that additional funds, that additional investment, all that money going to the bond market brings interest rates down. So the more we hear about uncertainty in the economy, market crashes, recessions, we may actually see rates continue to fall. So like I said, 1% lower than last year. That means clients can probably save 12 to 15% on their mortgage over last year. So get those buyers out there. Hopefully we see some activity this weekend. I'll keep you posted on rates and what they're doing. Next, I got 2 classes. One, Establishing Your Value, already touched on it. I know I'm not a real estate agent, but sales is sales. So I have to meet clients and tell them how great it will be to put them into debt for 30 years and get them to sign on the dotted line. I think I can teach you guys some great skills on establishing your value with buyers and sellers. So we're going to be talking about that initial appointment where you get the agreement signed, and then after that, how do you establish your value to get more contracts, more people working with you. So come to those classes. You can check out my bio to sign up for that one. The other one I have is Seller Paid Buy Downs Explained. That's a 2 CE credit class. Great class. We're going to teach you what are all these temporary buy downs, what are permanent buy downs, how much do they cost, what's the benefit of each, how to negotiate them with the seller, and the benefit to the buyer. So affordability is a huge issue right now for buyers. That's why they're sitting on the fence. So come to the class and we'll teach you how to address the affordability issue by getting seller paid buy downs. So that's a 2 CE credit class. Come check it out. Last thing, adjustable rate mortgages have become much more beneficial lately for clients. They are about 0.375% or lower than a 30-year fix. Now, an adjustable rate mortgage is fixed for 3, 5, 7, or 10 years. So a lot of people are doing like a 7-year adjustable because it's fixed for 7. They'll probably refinance before it adjusts. It can also adjust down, so keep that in mind. But we have a jumbo adjustable rate mortgage as of today. You have perfect credit, 20% down, low debt to income, meet all the caveats. We have an adjustable rate mortgage on a jumbo today for 5.125%. Now, that comes with 3 points. We will cover one of them. So now you're left with 2 points. So if it's $1 million loan, that's $20,000. You can either, if you have a buyer, you can negotiate that $20,000 to be paid by the seller, or if you have a seller that can't get their $1.25 million home or higher sold, we can advertise that rate for them as long as the seller's willing to cover that other $20,000. So not too bad on that size loan amount, and we can get clients that are out looking in the fives, low fives, or maybe attract some buyers to that listing that's been sitting a little longer. Again, luxury, it's an arm, there's terms, there's fees, we can talk about it, but if we can help you market your listing better or help your buyer get under contract quicker because they found a rate that gets them a payment they want, let me know, hit me up. Lots of stuff, check out the bio for the events, sign up, hope to see you soon. I'll talk to you.